Hi, I'm Dr. Boyce Watkins. Welcome to 3 Minutes or Less. 3 Minutes or Less is where I give you the Dr. Boyce breakdown on an important topic in 3 minutes or less so you can get back to your busy day. A lot of you have been following the stock market, and you've seen that the market's been plummeting the past few days, been hit pretty hard. Most of it has to do with the trade war between Trump and China. But also what's interesting is that a lot of you have asked me about IPOs. And one of the things that I've always said is that you shouldn't get too excited about IPOs, especially tech IPOs or hyped IPOs. Hyped IPOs, what they tend to do is they tend to pop off like a rocket in the beginning, and then they plummet when the world kind of comes to its senses. Snapchat, I believe, did that, and a few other companies have done that. Now, IPOs are beneficial if you're an institutional investor. You can get in before the rest of the market because then you get to take advantage of that initial pop. Regular people don't get to take advantage of that initial pop. So the latest big IPO is Uber. Uber shares came out at about $42, and then they shot up to as high as, I believe, $45 or even more than that, if I'm not mistaken. And they've dropped tremendously. I think now I'm looking here, and Uber shares are trading at about looks like is that $38? Okay, so 37.38. So I thought it had gone down to 34, but it hasn't. It's been as high as 44.73. It came out at 42. So if you jumped into Uber, you initially had a loss, had a decline. Now that does not mean that Uber can't be a good investment long term, though. Like I can say that I bought. I'll admit that I bought the dip. I went ahead and bought some shares after the initial pop up and decline. And I plan to hold my Uber shares for a very long time. Most investing should take place over a long period of time, not something that's short. And I'm reading here at AP News, and it says it's rare to see a tech company hit so hard upon going public. Over the past 5 years, just 10% of similar companies finished their first day of trading below their IPO price. So most IPOs do not drop below the original price on the first day. This is according to Mark Kennedy, senior IPO market strategist at Renaissance Capital, which is a manager of IPO-focused funds. Uber's revenue last year surged 42% to $11.3 billion, but the company has admitted that it'll be years before it actually turns a profit. So Uber is not a profitable company. Uber is a company that makes a lot of revenue. They have a lot of market share, and that kind of reflects the culture of Silicon Valley. Silicon Valley is built around this idea of spending tons of cash to get a big market share and get massive revenue. And you then have access to capital. You have a lot of cash flow flowing, but you don't have a profitability. And so that's why in that whole conversation that people had about Donald Trump, and they were saying, oh, in the 80s, this proves he's a bad businessman. He didn't make profits for several years. Well, a lot of companies don't want a profit. A lot of the owners are like, look, I run the company. I can take money out and have assets and access to capital, things like that. I'll make a profit later. Eventually, I'll get around to giving money to the IRS, but I'm going to delay that as long as possible. So Uber is an example of a company that isn't going to make a profit for a long time, but has billions of dollars in market value. In fact, right now, I believe that the total market cap of Uber is $63 billion. So, a person who doesn't understand investing can't understand how a company that does not make a profit could be worth $63 billion. Well, that's because your profitability isn't, or your value as a company isn't based solely on whether you make a profit. It's based on a lot of factors that go into long-term revenue projection, which is actually the number one factor, right? Long-term profitability, what they eventually think you're going to make. But also in the shorter term, things like access to capital, free cash flow, all those other factors play a big part in what the value of your company is. So don't buy the hype, in terms of how people analyze things like this. Stay away from short range IPOs. I'm not going to tell you to do that. That sounded like I'm telling you to do it. I try not to do that. I don't mess with those things, honestly, and I tend to be a long-term investor. So if you want to learn about investing and you haven't taken a class on it or anything, we have a great class in the Black Business School. The first month is free, and after that, it doesn't cost you more than a Happy Meal, but it's better than any class you'll ever take in college. I can guarantee you that much, and colleges charge all kinds of money. So feel free to go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. Now, I keep saying that I'm going to do 3 minutes or less. I might want to call this show 5 minutes or less because I'm looking at this clock and it says I've been talking for 4 minutes and 48 seconds. So anyway, I'm out of here, guys. Hit the thumbs up button, hit the share, subscribe button. I'm out of here. I'll see you soon. Peace.